Okay guys, welcome to this video. On this video, I would love to share my personal market preview of UX100, what I'm expecting the market to do and where I'm expecting the market to go. But mind you, this is not a trade advice or a financial advice of any sort, and this is not a signal at most. This is not a signal. This is just my personal idea on the market. So personally, when I want to analyze the market, something like this, I would love to start from the higher time frame, due to the higher time frame gives the basic structure of the market. It gives the bias and it gives a clear bias of the price. So on the 3 month time frame, we can actually see here, and mind you, I'll be using ICT times because I trade using the ICT model. So on the 3 month time frame, we could see that price traded into this FVG here, this 3 month FVG here, this box, that is the 3 month FVG here. And if we take our fib level, place it as this recent low to the recent high, we could actually see that price traded down to the equilibrium. This is an equilibrium. This is the equilibrium of this, the price leg from here to here. This is the equilibrium here, and price traded into equilibrium and went into the nearest drawn liquidity of the equilibrium, which is this 3 month FVG here. Normally, this is also known as a premium discount level, whereby this is a premium. From here to here is a premium, and from here to here is discount. Let me give a clear example of this. From here, we'll sell at these green lines and we buy here, or buy here at this red line. So price traded into this equilibrium and went into the 62% retracement level. This is a good place to buy. This first blue line here is a good place to buy. If you're an ICT trader, you would know this. This is also known as the return to OT level. This from here to here is a good entry point. From here to here is also known as the OT level, but that is not the main point of this retracement now. So price came into the OT level, or the 50% equilibrium, and traded into this 3 months FVG. So when it came into this FVG here, it created a swing high. It created a swing high here. A swing high is basically a swing high is made up of 3 candlesticks, just like here. This is an example of a swing high. A higher candle to the left, a higher candle to the right, and a lower candle in the middle. This makes up a swing high here. This one here makes up a swing low, a lower candle to the right, lower candle to the left, and then a higher candle on the middle. This makes up a swing high here. So that price traded into this 3 months FVG. It created a swing low. It created a swing low here. So I'm expecting price to move up and possibly take out the next high, and my next drawn liquidity on the 3 months time frame, without this going here, my next drawn liquidity would be this 3 months order block. This 3 months order block here. Possibly we can also use this 3 months order block here. So going to the 1 month time frame, let's go to the 1 month time frame to see what price might be doing. Going to the 3 months time frame, we see when price traded into the 3 months FVG, it took out a sell side liquidity. This is known as a sell side liquidity. It took out a sell side liquidity. This is another example of a swing high here. Sorry, a swing low here. Price took out a swing low here as sell side liquidity, created another swing low here, and the next thing I will be expecting price to do is to fill this FVG here, this 1 month FVG here. Once price drop into it, then possibly take out this buy side liquidity, which is where the price is moving next. Then after that, the previous candle here created what is known as the ICT reversal template, classic reversal template. So this is mostly known as, some people call it engulfing candlestick or engulfing pattern, but here we can see that price took out the low of the previous candlestick. This is the low of February candlestick. Price took out the low, that is the March candlestick, took out the low and also took out the high and closed as a very healthy candlestick. So next, I'm expecting price to actually take out this buy side liquidity here. I'm expecting price to take out this buy side liquidity. So going to the weekly time frame, we could see here, after price took out this sell-side liquidity when it traded into the 3-month FVG, price gave a BMX here, slight BMX here. Then when price BMX, then the invalidation point of this bullish move stays here. If price had taken this low out, then I would be expecting, or I would guess that price would have continued going lower till it creates another, liquidity pool below. So this is our invalidation points. Price gave a BMX here, came down, but it didn't hit the invalidation point. Then it continued going up, then created another BMX here. Price also took out this buy side liquidity here, a swing high here, took out the buy side liquidity, then dropped into the 1-week FVG. This is known as FVG. This gap here, this gap between this high and this high is known as FVG. Price filled this 1-week FVG, but know that this is known as a conservative part of, because there is another FVG here. Price might have came down into this place. So while trading something like this, you also keep at the back of your mind that price might also be drawing down to this place. But this would have been a better spot to buy. This would have been the best spot to buy because it has an OBIM. What I mean by OBIM is that it has an order block and also an imbalance. So this would have been a better spot to buy, but price didn't come down to that point. It created an ICT classic reversal pattern here after filling this FVG, which tells us that price would be going up after this candlestick closed. It means that from here we should be expecting bullish to the next buy side liquidity. So after price took out this, it continued going up. So let's go to the daily time frame to see what price is doing on the daily time frame. Okay, also on the weekly time frame, let me say this first. Price also traded into a volume imbalance. So you could see here, this is known as volume imbalance. This here is known as volume imbalance. So price traded into the volume imbalance and pushed up again from here. This is known as a volume imbalance. Volume imbalance. Okay, so price went up. So going to the daily time frame. Okay, we can actually see this. Price took out, after price traded into the 1-week FVG, it took out a swing low, an equal low, sorry. It took out an equal low here, gave a BMX, went up, then traded into this daily FVG here. Price was too fast. The drawn liquidity was very much that price didn't have the chance to come down very well. Price traded into this FVG and continued going up, created an imbalance here, came back, filled the imbalance, and continued going up here. I think price traded into 1-week order block. That is it. Price traded into 1-week order block here. And also volume imbalance here. It makes it a very, very volatile place. Price reacted to this, came down, traded into, after price hit the volume imbalance and the order block here, price came down into this FVG. We'll call this a conservative FVG and an aggressive FVG. I'm also expecting price to drop down to this point, but at the same time, I would keep myself to a point where I won't want to miss any opportunity here, and I'll also be expecting an opportunity here. So price traded into this FVG here, went up, came down, took out this sell side liquidity here, went up, took buy side, gave a BMX here, a slight BMX here, and return back to this daily order block. Call this a daily order block. Return to this daily order block, and looking at how price reacted to this place, price dropped into this place and immediately went up. It didn't close below it. So this is my first invalidation point. Then this is my next invalidation point here. Okay, this is my next invalidation point here. So I'm expecting price to react from here, but if price invalidates this trade, then the next place I'll be looking forward to buy is here. if I see a confirmation on the 1 hour 15 minutes time frame using the ICT 2022 model, that's basically my entry model. This is what I'm expecting from the market, either from here to start going up to the next drawn liquidity, which is here, or price would come down to this point. But this is not, I'm not just going to buy in immediately. I'll be waiting, I'll be going down to the lower time frame to scout for a better entry, a tighter stop loss and others. But majorly, this is my, as a day trader, this is my drawn liquidity here. This high here. This is my drawn liquidity on the daily time frame. Why? Because price created a equal high. Price created an equal high here. From here to here, price created an equal high here. So this high couldn't take out this high. So this means an equal high. So price, as price didn't close below this daily order block, I'm expecting price to continue moving up from here. It's just a two-way something here. Because this from here, the way this candlestick closed, I'm expecting a movement from here. Pick out this. Come back to. So this is just a personal view. I'm expecting price to, from here, to go up, take out this daily buy side liquidity, draw down, maybe into this. I'm using this order block as a reference point, but maybe in future price might create a fair value gap here and just trade into it. This drawdown means price coming into this order block. This might serve as the future order block, or price might create an imbalance while going up to this place. Then price will be retracing it into it. Then we'll be going to the next place, which is here. So this is just my personal view on the market. Or price might do this too. This is also possible. Price might, from here, pick out this, then maybe retrace into a fair value gap it will be creating here, then S up. So this is just a personal view of the market. So I'll be using 1 hour to utilize. Once I see a BMX on my 1 hour, I'll be going down to the 15 minutes, trading on the section, the trading section, 8:30 New York time. Then I'll be longing it. Maybe I'll be for the sake of day trading, I'll be targeting here, but swing trading, I'll be targeting this high here. So we're doing a review of this video, if whether the analysis was right or wrong, and then we might be talking about, if it was wrong, we'll be talking about what happened and what went wrong or what the market did. If it was right, we'll also look at how the market played out.
Thanks for watching. Please subscribe and like this video.